Hey guys, Ray and Andrew here with REH CPA, and one of the things that we like to go over with new business owners is self-employment tax. So Ray, what is self-employment tax?
So self-employment tax, and this is a very important subject, especially for your Schedule C small business owners, because so many times this self-employment tax catches them off guard, right? So I really like to educate them on the front end about self-employment tax. So what self-employment tax is, it's your contribution to Social Security and Medicare. If you remember, when you used to get a paycheck, or if you currently get a paycheck from an employer, on that paycheck you have two lines of withholding called Social Security and Medicare, right? The Social Security and Medicare is it is 7.65% of your payroll. And what that is that's you contributing to your Social Security and the Medicare, right? So you paid 7.65%, and your employer matched that and paid another 7.65% for you, right? So, but once you become self-employed, you have to pay both sides of it. The total's 15.3%, right? So that's your contribution to Social Security and Medicare. So let's say, for example, you are a Schedule C business and you net $100,000. Let's make math easy on me, right? Your revenues were 200, your expenses were 100, you have 100 left over of net profit. You're going to pay, the first layer of taxation that you're going to pay on that 100,000 is self-employment tax, 15.3%. So you're going to pay $15,300 in self-employment tax. Now that's before your federal taxes hit, before your state taxes hit. So, and not much cuts into that number. There's almost nothing that will reduce that number once it's calculated. So you have to do some really good planning around that self-employment tax to make sure you're aware of it and make sure you're ready for it. Right. So it's one of those taxes that people don't like to pay because I think a lot of them don't understand it. They just see it as a tax. I try to get them to understand that that's a tax that's actually going to benefit you personally, right? When you go to retire, that is going to determine how much Social Security you receive. So if you are constantly trying to avoid and never pay self-employment tax, you are not going to be building any Social Security credits to one day when you go to retire to be able to start drawing Social Security. So you have to think about that. I tell people all the time, think about the future. Think about when you're turning 65, 67 years old and you want to retire. If you're not doing a bunch of substantial retirement funding on the other end, then you're going to need Social Security. Right. And if you've constantly been trying to avoid Social Security tax or self-employment tax, you're not going to be building up anything for Social Security. So the way Social Security works is, or not Social Security, but the self-employment tax works is that, you will pay that 15.3% all the way up to the FICA max, the Social Security max, right? So it's not on all of your income. It runs up to, and it changes every year, right? The max changes every year. So for this year, 2021, the max is $142,800. So once your income from your small business reaches $142,800, you'll pay that 15.3% all the way up to that point. Now, once you hit that point and go past it, you're no longer paying the 15.3. It then drops to 2.9, right? Because you're no longer responsible for funding your Social Security up to that point. Now, what's after that is the 2.9%, which is your Medicare portion, right. And that goes on forever, right? So we do a lot of tax planning around self-employment tax. So if you have a small business and you've had problems with large balances due, or you want to understand better self-employment tax or how to manage self-employment tax, there's a lot of things that we can do, whether it's through corporate structures, whether through asset purchases or retirement plans. There's things that we can do to minimize and or manage that self-employment tax, but it's a very good concept for small business owners to understand, because not only does it affect you now by the taxes you pay, but it affects you in the future in your retirement income. So if you need help with that, by all means, this is a good time of year because we're starting to get into tax planning. So give us a call and we can sit down with you. We can do some tax planning for you, give you an estimate of where we think your taxes are going to land, and help you manage it before year end.
Yeah, Ray, thanks for going through that with us. It's very important for small business owners to be aware of self-employment tax and know that it's out there, and know how to manage it and know how to plan for it. So I appreciate it, Ray. Thanks.